All right. Hello, everyone. This is Kelly with Behold Financial Enterprise, and I am going to share. I pass out this business card a lot, and it talks about the actual categories of how our credit scores are calculated. And it talks about the FICO score, the range from 300 to 850, where we have 550 points that we actually can work with our credit scores. And then I break it down where I talk about each category. So I know that when I work with a lot of clients, they talk about how they work with Credit Karma. And Credit Karma is a Vantage score. They use Vantage scores, which is like the educational score. And it's kind of like a marketing site where they get your data and they use it for various marketing avenues, if you will. And so I don't recommend that you use Credit Karma because of the Vantage score if you are trying to purchase anything significant like a home or a car or something like that, because most of the time if you're looking to get a home, they're going to base it off of the FICO score, not Credit Karma. So FICO Score is the Fair Isaac Corporation, which is the credit scoring model, if you will, that banks use in order to extend credit. And so there's two gentlemen basically that created the FICO score, if you will, which was Bill Fair and Earl Isaac. They created the company. And so one is a mathematician, which excited me because I don't know if you guys know or not, but I have a math degree. But anyway, that's neither here nor there. And then the other one was a data scientist. And so they created basically an algorithm that helped, that kind of generates how likely you are able to pay your bills. And it's basically data, okay? So we really don't have scores, we have data. And so what happens is that data is what comes from the three major credit bureaus, which is Equifax, Experian, and TransUnion. And so a lot of people will ask me, well, Kelly, why is my score different from one bureau than the other? They're all three different companies. And so data is being reported to each of those companies. So you might have a company where one data is being reported to TransUnion, but they may not do it to Experian and Equifax, and then vice versa, or it all may get reported. So that's why you'll see that different scores going up and down and data being reported differently, because it's actually three different companies. So anyway, like as I stated before, is that there's 5 different categories with regard to how FICO is reported. And so I'm going to talk about each one, and then I'm going to tell you the scores, and then I'm going to give a brief example explanation of them, and then we'll take it from there. So as I said on this, you have payment history, and payment history is 35% of our credit scoring, and it equates to 192.5 points. Okay, and then we have utilization, which is 30%, and that is 165 points. And then we have types of credit, which is 10%. And it's 55 points. I should have did that next to the next one. But anyway, we have length of credit, which is 15%, and it's 82.5 points. And then the last one are our inquiries, which is 10%, and it's 55 points. So again, I'm going to go through each one and kind of talk a little bit about them so you can kind of understand how each of these points work and how the percentages are. So when we talk about payment history, I said it's 35% of your credit score. So examples is like you want to pay your bills on time, okay? When we do credit repair, we see collections on there, we see late payments, we see charge-offs. We really encourage and educate our clients that payment history is 35%, 192.5% of your credit score. So you really want to focus on making sure that you're paying your bills on time, okay? And then the next category is utilization. And what I said was it is 30% of your credit score, and it's 165 points. So with utilization, this category is the quickest way to raise your scores. And it's one of the most important categories because you want to make sure that you are under 30% of your utilization on credit cards. So you do not want to go over 30%. And if you are, you want to make sure you pay that down as quickly as possible because it affects your scores. And I ask or recommend my clients that you don't really pay on the due date. If you can, back it up and pay on the statement date. I think that will help your scores as well if you pay on the statement date versus the due date. Okay. And then the third category is length of credit. Now, when we talk about length of credit, it is again 15% and is 82.5% of your, or 82 points of your credit score. Okay, let me say that again. It's 82.5 points and it's 15% of your credit score. Okay, this is length of credit. So banks look at how long you have been using credit. So you want to look at, they look at the oldest accounts and how long that you've had that account. So it's kind of like you want to let them see the aging of your accounts. So I don't recommend that you close anything out. Okay, just you can pay it off, but don't close it out because it's the age. That's what the banks look at. And then the fourth one is types of credit or a credit mix, okay? And that is 55 points, 10% of your scores. Now, there are two types of credit that I want to talk about. And the first one is like installment, okay? And that's like you pay X amount a month for this amount of months, okay? And so I hope that makes sense. So you pay X amount of dollars, that amount of months for a certain amount of months, okay? We encourage you to have at least two types of installments, okay? And then there is that's the specialty account. And then there's also the promissory. And that is like student loans, which I will talk about that in another video where we like to educate on student loans. And we do have a program where we help our clients with student loan relief. So if you have student loan debt, reach out to us because we help with that also. But a promissory is like a mortgage, okay? And then, like I said, you want to have two types. So you want to have the making sure I'm saying this right, the installment type, and then you want to have the revolving type. So the revolving, an example of that is like your credit cards. So there's like credit cards, you want to, pay those down, and it's like there's no set monthly payment, if you will. It could vary depending on how you pay them down. And it doesn't have an end date like what a mortgage would have, okay? And same kind of with if you purchase a car, it has an end date of when after you pay it off, that you'll know when your last payment is. So you want to have at least 2 to 3 revolving accounts, and you want to try, if you can, to pay them in full at the end of each month. So don't, keep having balances, okay? And again, this shows the banks that you know how to manage different types of debt, okay? And then the fifth one is on my little pie chart as inquiries. And again, I said that's 10%, which is 55 of your points. Now, this category, it can do a lot of damage if you don't know what you're doing, okay? So you don't want to apply for a bunch of credit at the same time, all right? You want to do it in short amount of time, and just be very careful with applying for a lot of things at one time because those inquiries hit. And while we're helping our clients with restoring their credit, we ask you, please do not try to apply for any additional credit while we're helping to restore your credit. So I just like to tell people that we use the power of the law to remove any negative items that are on your report. And I don't know if you're aware of it or not, but there are over 300 pieces of criteria under the Fair Credit Reporting Act that we make sure that they are adhered to when we are working on your files. So it's not just getting things removed. I mean, we work to make sure as much as possible, all negative items are off, and that when your reports have the positive items, that's what we're getting to. So we try to tell our clients, don't always focus on the scores. We want to focus on cleaning it up and having it as positive as possible. And by doing that, automatically your scores are gonna go up. So look at it like this. We review it similar to like doing an audit, like what the IRS does. They audit you, and depending, they'll tell you whether you owe them something or if they owe you something. And prayerfully, we want them to owe us. Okay? So you can do credit on your own. I mean, you don't have to pay us to help with your credit, to restore your credit. But you also want to make sure that if you do decide that you want to restore your credit on your own, that you're abiding by the FCRA, the FDCPA, and these 300 pieces that need to be adhered to when items are being reported on your reports. So again, as I said, we are here to help your reports have positive. We want nothing but positive activity on your credit reports. So what I tell my clients is credit repair is like weight loss. That you get the weight on and you want to get it off, and it just takes forever to get the weight off. But when you get it off, you're so excited and you're like, hey, I look good. And that's how we want you to feel while we're working on your credit report. That once we get it to the way that it needs to be, if you will just feel so excited, and you'll be able to aspire to get the things that you want in life, knowing that you have options to get better rates, if you will, percentages and payments on any type of loans or mortgages or whatnot that you might want to take out. So anyway, I just kind of wanted to jump on and give you an overview of how the FICO scores are created, what the 5 different categories are, and just let you know that we here at Be Whole Financial Enterprise, we love helping our clients get out of the credit hole in order to be whole. So if you are interested in learning more, or you're interested in having us help restore your credit, we encourage you to reach out. You can go to www.bewholefinancial.com, schedule an appointment, and we'd love to sit down and do an analysis of your actual credit report to see how we can help. We love doing this. It's a pleasure for us to serve you, and I hope that this was great information. And if you want to reach out, please do. We look forward to helping you, and we just want to say, be whole. Thank you.